All right, in this video, I'm going to go over how to calculate your stop loss and your take profit. Now, I've done a video on calculating pips before, and I'm doing this again because I get a few questions on this, and I'm going to add to it a little bit more. And I want to just show you how a simple way of how I do it, how I use my phone for my calculator, how I go to a chart and pull up the numbers if I'm not sure which unit of measurement goes next. Sometimes you just need to see it visually. So I hope that these simple examples will help you guys. You guys know that I'm into like really breaking it down very slowly and giving you a lot of examples. So let's go ahead and jump right into it. I'm going to give you an example of a yen pair, and I'm also going to give you an example of a 4-digit pair that comes after the decimal. So guys, when we look at the Forex market just basically moves up and down, and it moves up and down in pips. So a pip is nothing but a unit of measurement that expresses a change in the value of the market. So when the market moves up, it moves up a certain number of pips. When it moves down a certain number of pips. So let's say, for example, that we're going to get into a pair, we're going to get into a trade, and we're going to get into USD JPY. And I'm going to just bring this down a little bit. And we're going to get into a sell, okay? So I'm going to show you how I look at this and what I do. I'll also show you my phone, how I go to my phone and find examples. And so here's what you're going to do. So here's our entry price, 110.984. Now on a yen pair, you're only paying attention to the second digit after the decimal, which is the pip. The third digit is the pipette. You don't need to do anything with the pipette. Pretend like it's not even there, all right? So here we are. This is USD JPY. You're getting into a sell where price is going down, okay? Price is going down on a sell. It's going short. So if our entry is here and we're getting into a sell, we're going to take profit down here, all right? Which means we want our stop loss to be up here. Our stop loss is a protective order that's going to get us out at a certain point if the market goes against us. So if we are trading a dollar lot size, right? Let's say if we wanted to do a 30 pip stop loss, that means our entry price is here. We would do a 30 pip stop loss here. So if the market goes against us more than 30 pips, it's going to stop us out of the market so that we don't continue to lose money. So how would you calculate your stop loss on a sell for USD JPY? If we wanted to do a 30 pip stop loss, we would add 30 to 98, all right? I always just work with the 2 digits after the decimal. Really, you're focusing on the second digit, but this is how you would position the numbers, all right? So you would add 30 to 98. All I do quickly in my head is I go 98, 99, 111. And then you know that if you add 28 more, 28 plus 2 is 30. So basically your stop loss would be 111.284. Now let me just do this. I'm going to show you on my phone. I'm going to pull up a chart and we're going to do it together, because sometimes when you get into the next unit of measurement, it's a little confusing. You might question to yourself, am I doing this correctly? How do I know that I'm using the correct numbers? And so I'm going to take you to USD JPY on my phone and we're going to look at it together. So here is USD JPY. And we're going to go ahead and find a horizontal line. So if you click on I'm using an iPhone 7 Plus. So if you look at the top, there's a circle, a triangle, a square. If you have an Android, all you have to do is, I think, tap on your phone and that little circle comes up, and then you'll see your tools. You click on that, and then you hit the horizontal line, which is that first little object right there. And then all you do is tap your screen, and you can now your red line, your horizontal line is on the screen. So all I do is move it up and down to find 110.984, which is right there. Well, it's at 983, but it's not far, okay? So let's say it's at 983. So if you wanted to know, okay, well, what comes after 110.999? Well, you're going to go into 111.00, okay? So if you're ever confused, that's how you can look at it to make sure your calculation is correct and make sure you're doing this right. So all I do is I go 98, 99, 111, all right? And then I see, if you look at the numbers as you move the line up, 1, 2, 3, 4, 5, that's 5 pips, that's 6 pips, that's 7 pips. Remember, we're ignoring the pipette. Pretend like the third digit is not there. That's 8 pips, 9 pips. See how you just keep going up? All right, so all you do is you're just gonna add 30 to 98, or you just go 98, 99, 111, and then you add 18 to 111. So 18 plus 2 would be, or I'm sorry, we're doing a 30 pip stop loss. So basically you go 98, 99, 111, and then you would add 28 more pips to that, because 28 plus 2 is 30. All right, so it would be 111.28. That would be your stop loss. All right, so let's go, and then vice versa. If we wanted to calculate our take profit, all you're going to do is you're going to subtract 30 from 98. And sometimes what I do, guys, if I need to do a quick calculation in my head, I do it in my head, or I just do 98 minus 30 is 68. So my take profit would be 110.68. Got that? All right, so that's how you do the calculation, all right? The important thing is just knowing where your numbers are positioned when you're adding and subtracting. So let's go back to our example, and now let's look at a buy. So if we're doing USD JPY and we're doing a buy, we're working with the same entry price, but this time we're going to do a 20 pip stop loss. So we're in a buy, which means that here we are, this is our entry price. We're in a buy, so price is going up. That means our take profit is going to be up here. Our stop loss is going to be down here. So in a buy, you always subtract for your stop loss. And if it helps, you might want to just write this out, or you can even print this, take a picture of it, put it on your wall so that you can remember. But in a buy, your stop loss is always going to be at the bottom. So if we wanted to calculate a 20 pip stop loss on 110.98, all I do is 98 minus 20, which is 78. So our stop loss would be 110.78, okay? And if we wanted to do our take profit, we're going to do a 20 pip take profit. So remember, 98, 99, 111, and then 18 plus 2 is 20. So 111.18 would be our take profit. Hopefully that's clear to you. If so, comment on this video. Let me know if you understood that. If you don't, let me know what questions you have, and I'll break it down for you some more. All right, so let's look at a 4-digit pair now. So this is Euro USD, and we're getting into a sale. Now remember, on these type of pairs, you have 4 digits after the decimal. So this is different from a yen pair. So you have to make sure your numbers are positioned correctly. When you're working with 4 digits after the decimal, the 4th digit is the pip, the 5th digit is the pipette. Remember, we don't care about the pipette. Remember, just pretend like it's not even there. So we're going to focus on the 4th digit. So what I do is, if Euro USD, we're going into a sale, that means price is going down. That means our take profit will be down here. Our stop loss will be up here. So if we're going to do a 40 pip stop loss, that means that we want to add 40 to 1720. So what I do is, you can pull up your phone and you can just do, I can do this in my head really quickly, but if you need to do it on a calculator, all you have to do is do 1720 plus 40, okay? And that would be your stop loss, which would be 1.1760 would be your stop loss for a Euro USD sell limit. Now, if you wanted to calculate a 50 pip take profit, all you have to do is 1720 minus 50, and that gives you 1670. So your take profit would be 1.1670. Got that? You see how I did that? All I did was do 1720, and I subtracted 50 to get my take profit. So for a sale, you're always going to subtract to get your take profit, and you're going to add to get your stop loss. Now for a buy, let's reverse it. For a buy, we have the same entry price, but this time we're going to do a 15 pip stop loss. So for a buy, we are going to subtract 15 because we're expecting the market to go up, right? So here we are, entry price, a buy, which means our take profit will be up here because price is going up, and our stop loss is going to be down here. So in a buy, you always subtract your stop loss. So all you would do is do 1720 minus 15, which would give you 1705. So 1.1705 would be your stop loss. And if you needed to calculate that on your phone, you just do 1720 minus 15, and that would give you 1705. And to calculate our take profit, we're going to add 15. So you just do 1720 plus 15, and that'll give you 1735. 1.1735 would be your take profit. So guys, hopefully this is helpful. Comment on this video if you found this helpful. If you have questions, drop them on this video, and I'd be happy to answer them.